sister's in Suffolk.
Yeah, not too far.
Mm.
Hey everyone, so I see that we're now live. My pleasure to introduce Lombe and Justin Banon from Faculty Group and Boson Protocol, respectively. We're going to be talking about trends and opportunities in the NFT world. So Luke, do you want to just start by introducing yourself? Justin afterwards.
Certainly. Thanks, Michael. I just want to come out of the gates and say it's 5 o'clock in the morning here in Australia. So if I'm a little bit slow off the mark, that's why. I'm one coffee down, but I could probably do with another one, frankly.
Appreciate you joining.
I appreciate you having me, Michael. Thank you. Yeah, look, Faculty Group is a collective of 5 companies, of which I'm one of the 5 founding partners. We have 3 Aussies and 2 Europeans as the founding partners. We have around 150 in our team in total. We're a market maker, so we do algorithmic trading for 20 or 30 clients with a trading desk managed by our quant. We have a marketing agency that does a lot of guerrilla marketing, growth hacking, community moderation management, and so on, for 30 or 35 clients at any one time. That's where most of our team are. I think we have a little over 100 in the team on the marketing side. We have a sort of consultancy advisory, and we're advising 30 or 40 projects at any one time. It's not an individual that ever advises. When Faculty Group advises, you get sort of the full brains trust. Depending on what the question is, we throw the appropriate resource at it. Faculty Capital is our VC investment arm. We had a pretty aggressive investment strategy over the bull market, which we've sort of focused in a little bit more, laser focused over the last 6 months or so. And we've just spun up an LP fund out of the Cayman, which is a multi-strategy approach. And then we have Faculty Lab, which is our incubator and accelerator. So over the past 18 months, we've incubated around 9 projects. The first one was a project called Alliance Block. It's a great finance play. It's been doing well over these turbulent times. And the most recent one was Holoride, which is spun out of the Audi car manufacturer. It's very cool VR in the backseat of the car. And a few more things going on. We've actually built a couple of projects as well, one called Spool, which is a DeFi middleware. So there's a lot of stuff going on behind the scenes of Faculty.
Thanks, Luke. Justin?
Thanks, Michael. So Justin Banon, I'm co-founder of Boson Protocol and also Boson Portal, a couple of other applications. So Boson Protocol is this foundational Web3 primitive that enables basically trustless commerce. So it enables a buyer and a seller to engage in commerce without needing to trust each other, such that the buyer, either receives this physical item or their money back. And this is done by locking up funds into a smart contract that has some game theory to incentivize fair outcomes on both sides. And then this kind of claim on the real world asset is kind of wrapped as an NFT. So we've got, last year we raised about $36 million across ICO and private sale. And we went about building one of the kind of strongest teams in Web3. So our protocol designer also works for Ethereum Foundation, designing ETH2, some like Harvard blockchain legal scholars, etc. And we launched V1 in November. And on top of V1, we've done a whole heap of things like Metaverse Fashion Week with our application Boson Portal, which is a 3D sort of marketplace within Decentraland, enabling brands like Tommy Hilfiger and Hogan and a load of NFT projects to sell physical items as NFTs in the metaverse. We're about to launch V2 of the protocol over the summer, which is this kind of incredible upgrade. And then we're also participating in this whole kind of summer of digitals, which we can talk a bit more about.
Justin, you mind talking a bit more about that now? I think that Digital is a pretty pretty new and exciting trend that I can imagine that a lot of the audience doesn't know about. So, yeah, you want to explain what it is and why it's important?
Yeah. So, I mean, I think last year was like the year of NFTs, and there's been massive uptake of NFTs and digital fashion by, you know, lots of luxury brands, etc. But what we're seeing is just this kind of trend where if you spend $10,000 on a digital wearable like a handbag or sneakers, then the expectation is increasingly that you get the physical item as well. And you know, if you spend $10,000 on a physical handbag, or you know, buy a high-end pair of sneakers, then why wouldn't you get the NFT as well? And this is just becoming increasingly expected. And so, you know, off the back of Metaverse Fashion Week, we've just, you know, we've been talking to lots of brands and lots of partners, and we're about to sort of kind of announce this whole summer of Fidgetals, where there's a whole load of activations and events around things like NFT NYC, Consensus, and some you know, Token 2049 in Singapore, where brands will be doing activations of digiphysical items, whether that's in our Decentraland space, which is Portal, or a whole load of other participant spaces, and just doing kind of crazy things like, yeah, you go to a store, a real store in real life, you see a digiphysical item in the window, you can't buy it, you click a QR code, it takes you to the metaverse, you play some sort of game, you then get, you know, an NFT that can then be redeemed for the digiphysical item, and then loads of kind of activations like we know we're building out this whole nightclub that's going to have a two-way mirror, so that and is partnered with one of the major nightclubs in London, and so, you know, people can be dancing in the nightclub and see into the metaverse, or you can go into the metaverse and hear all the music, and then doing like digiphysical DJ drops and stuff. So everything is just this mashup of digital and physical events, experiences, products, and obviously, like, Boson Protocol is this kind of foundational primitive that just enables this.
Justin, you mentioned a couple of brands there that I think everyone's familiar with. So you're obviously talking to well-established brands and sort of retail lines and so on. What's been the uptake with NFTs? I know there's been a lot of general interest in the marketplace, but in terms of deploying this on a commercial basis, what's the interest level like? What's the keenness and eagerness to get involved in this?
I mean, I've never seen anything like it in terms of adoption. I mean, about 18 months ago, we were discussing with one of our investors, Jamie Burt from Outlier Ventures. Okay, well, we've got this general purpose technology, Boson Protocol. What's the niche that we're going to kind of build that bridge, that beachhead in? And he was like, well, how about the metaverse? That's, you know, and I didn't really know that much about it 18 months ago. And that stayed like that for a while, but suddenly this switch flipped, right? I mean, it was happening last summer, and then obviously the Facebook Meta announcement. But now, you know, every brand must have. I mean, it's like the brand manager is going to get fired if they don't have a metaverse strategy. I mean, that is right. It's that, right? And so it's not a question of, there's no selling, right? It's how can I? We've had to build out a whole kind of on the portal side, like a whole, you know, almost like a metaverse agency to support brands to build out these experiences, and then plug all our technology in, because there's this huge demand and not the ability. So there's no selling. It's a must-have, and I think these brands see it like, you know, the web, mobile, and now the metaverse. It's the next interface. And I mean, Tommy Hilfiger, when we interviewed him within our space in Portal, just said, look, you know, we must do this in order to stay relevant, in order to engage with our customers where they are, and you know, it's not optional.
So a crazy stat that I'll share with everyone, you guys might have seen, is that Ralph Lauren their Q1, I believe, revenue increased by about 25% from the participation in Roblox. And that number didn't come from their Roblox sales. It came from, I mean, partially it did. Their digital close revenue increased by well above 25%, although much lower percent of their total revenue. And but the kids that were playing Roblox would then go into the real world and ask their parents to get them a polo. So their real world revenue actually increased by a huge amount as well, which some brands are starting to see. Yeah, kids that didn't know what Ralph Lauren was beforehand. So brands are starting to see that, but Justin, a lot of the brands that we're talking to at Metaverse Group and at NFT Basel, some are more innovative and they're looking to make a move today. I agree a lot all are thinking about having a metaverse strategy, but a lot are thinking in terms of like, they know they need a strategy. They don't necessarily know they need to act today or tomorrow. I wonder your experience with that and how you kind of bring the I wonder your experience with that. And if you're,
I mean, vast majority of the ones we're speaking to are looking to do something now. Also, this phygital, this kind of phygital concept. I mean, you mentioned buying the digital and then having that driving sales and the physical and stuff. I mean, that is a really powerful bridge between one world and the other, right? And it's kind of tying these sort of two things together. And I think brands really get that in terms of, their main business is creating physical fashion, and they know that digital fashion is really important as well. And this kind of combination is just a kind of like a no-brainer for them. So for sure, I mean, the thinking is evolving, but I think the vast majority, the vast majority of them are either actively doing something, planning something, or strategizing. So, and I think over the summer, this thing is just going to take off and make what has gone before look like a kind of drop in the ocean. I think. I mean, the possibilities for fashion are so exciting. And if you believe in this thesis that we're going to increasingly live in these digital worlds, then it's even more important to kind of craft your identity within a digital world, because you don't even have your physical uniqueness to differentiate you. You're just like a blank avatar until you paint on it. Yeah.
What is it that you think is, and Luke we'll switch to you in a second, but what is it that you think, Justin, that is going to, because right now the metaverse, it was super hot after Facebook introduced their historic rebrand. And I think that now the market has realized that although the market is going that way towards an immersive digital future, that the current metaverse experience we have today is not, it's not there yet. We're still in the very early innings. So I wonder why you think that the trend is going to reverse end of the summer or after the summer.
Well, I mean, it's just the experience that we have of speaking with brands, and the possibilities, particularly if you have this kind of mixture of digital and physical realities, then you're not just kind of relying entirely on this kind of metaverse thing, having kind of connecting physical experiences with digital. There's a lot of that happening. And I think if you look back at I kind of studied technology innovation and stuff a while back, and if you look at how technology diffuses and is adopted within society, it once there is this demand, it drives the development of the technology. And look at for example, e-commerce, and Amazon got into e-commerce when the technology wouldn't even enable you to do it, right? It was like dial-up modems. It was super slow and clunky. It was like it wasn't workable, but it just drove this rapid adoption of technology and improvement of the experience, and that's what we're seeing now. Huge number of teams and projects that are working on just improving and developing that experience, and loads of brands want to be the first to then kind of implement these new technologies as they come off the conveyor belt.
I think that last point you made is really quite critical. And I was going to ask you, Justin, how many marketing agencies or advertising agencies are you working with, as opposed to directly with particular brands when you're sort of discussing this metaverse narrative?
Well, last week we signed up with 2 additional big global advertising agencies, and that's just a force multiplier for us, and also helps us in the they can do a lot of the creative and client management and stuff like that. And so it's definitely heading that way, where you now have these big advertising agencies, the big management consultancies. They're all developing these like metaverse kind of arms or divisions that are doing all of that. So that's a definite trend away from dealing directly with the brands, like with to dealing with these kind of creative agencies. And
the reason why I asked that is because of that last point you made about everyone wanting to be the first. One thing, I'm a bit cynical with general innovation. I mean, not with general innovation, with the path of general innovation. I was living and working in New York back in sort of 2015, 16 on a virtual reality or an immersive entertainment project back then, when VR was kind of in its heyday, and it really sort of came off the boil. I'm sorry?
A bit early.
A little bit early, yeah. And this is the thing, right? I mean, everyone's probably familiar with the Gartner hype curve, right? Where you have this, this peak stupidity where everyone just apes in and everyone's like, this is the next biggest thing ever. And then there's that realization that, well, hang on, maybe we're a little bit premature here. And I see this playing out with metaverse. And to your point earlier, Michael, the metaverse experience, if this, depending on what your vision of metaverse is, whether it's just sort of Ready Player One, immersive world that everyone's sort of living and acting and trading and participating in, that metaverse experience is still a long way off. In the same way that all these sort of play-to-earn games, most of them are pretty terrible if you look at it, really. And there was this sort of hype wave as people aped in, and we as a venture capital studio have invested heavily in both those sectors, have really slowed down. And I'm really curious to see how this does play out, because I feel like once, and just to play devil's advocate here for a minute, not to, pardon my language, shit on the industry, because I'm a firm believer in it all and where the general direction is going. But I think once you get these firsts achieved, first this, first that, first, fashion runway, first experience here, first whatever it might be, and the novelty kind of starts to wear off, and then people see it as less interesting, less attractive, and we sort of settle back down into a routine. I'm wondering what your thoughts are there, Justin. And
I mean, it's a bit of a subject of mine. As I said, I did a master's in innovation, and the sort of science behind the hype curve is the work of Professor Carlota Perez, and these technology adoption cycles, and these are the things that you see whenever technology adopts, right? Mobile phones, the first mobile phones were just crap, right? I mean, it was just a show-off tool. It was completely impractical. You could only use
to a briefcase.
Exactly. You used it in one block of New York. It was an entire briefcase, terrible call quality. Of course, that invention was never going to have a chance. Right now, mobile phones, I don't even have a landline, right? Maybe they're more so, and still the line quality on a mobile is seldom as good as a landline. But the fact is, they have this killer feature that landlines don't have, which is it's mobile, it stays with you, and exactly the same. The adoption of for the first generation of e-commerce, it was terrible, but it got better until you get to the stage that you are now. And so, at every single stage, you're always going to have people that, but look, that it goes in waves of, kind of installation and, adoption. And then there's, exactly as you said, there's a bit of a dip as, the technology needs to get good enough to drive society. But these waves, technology adoption waves, are how the technology adopts. And we're definitely, we've got a huge amount of adoption. I mean, crypto itself is the fastest adopting technology in history. And then if you look at, the metaverse, that's where crypto and mainstream are kind of overlapping. So yeah, I think these are just expected cycles with an overall mass adoption wave.
Yeah. Luke, I wonder what your thesis is. You brought up an interesting comparison with the metaverse and VR. And obviously VR in about 2015 or whenever you were in New York, I'm not sure the exact year that it was at its hottest, but approximately then, billions of dollars of venture capital going into the market. And the future of VR is, I think, much greater than it was in 2015. But the hype cycle was financing tools way before the tools were actually usable or monetizable, at least to the levels that investors were investing. And now we're having a similar trend with the metaverse, where there's huge amounts of capital that is going into metaverse companies that are that have valuations of times up to 1,000, crazy numbers. Whereas we're still very much in the proof of concept phase. And in this proof of concept phase, for example, the Metaverse Fashion Week, it went super viral. It was featured on New York Times, Bloomberg, Forbes, Vogue, times 1,000 publications. So the amount of PR and eyeballs to the metaverse was probably in the billions, or at least in the hundreds of millions, which is a lot. But the amount of actual commerce that happens in the metaverse was not a lot. It was, some, wasn't zero, but definitely not close to comparable to a global fashion week in the real world. So I wonder your thesis, to put the question back to you. Do you think that we're in a cycle that is going to be similar to the way that it went with VR, or what are your thoughts?
In short, yes. I don't have a master's in technology adoption like Justin, so I can't speak to the real nuances. I can only speak from personal experience of having lived through various waves of technology adoption, and I don't think that metaverse is, really exceptional in any way, apart from the fact that it does have that scalability factor. This is a software versus a hardware play, unlike VR or mobile phones, where you have a limitation with hardware units that we don't have here. So that there is much more of an ability to scale quickly. But yeah, look, I mean, like you see in the first wave of crypto, I mean, those of us were here through sort of 2016, 17 in that run up, and then 2018 when we entered that bear. There was, I think I remember giving a talk at the time in early 2018, there were 3,500 ICOs in the year. And of those that are still surviving right now, would be lucky if it was 10%. I think probably closer to 5%, frankly. Most of them have disappeared. And there's, I can point to several that I was personally working with, was advising to some capacity that just didn't make it. And I think that kind of consolidation is going to happen here as well. I mean, you can't have these valuations, which are frankly built on hype. And that's how everything is when you get the shiny new thing, right? Metaverse is the shiny new thing. I'm not discounting the fact that the practical applications are vast. And I think that the experience ultimately is going to be a really interesting one. And I think we are very much heading towards, that kind of Ready Player One immersive, almost dystopian reality to an extent. As to when, it's not this year, it's not next year, it's really not the next 5 years. But we'll sort of trundle along down that path. And I think that the inroads being made now are really interesting. And in the same way that in the turn of the the millennium, back in the late 90s, early 2000s, when you had the dot-com boom, most of those companies disappeared. But now we're left with, your Amazons and Facebooks and eBays and so on, that are, really representing a disproportionately large percentage of the valuation of the market. Same thing with crypto. You see this. I mean, if you look at, maybe I should have a quick check. Last time I looked, it was 13,000. Yeah, it's 13,433 coins listed on CoinGecko. I remember 6 months ago, in a conversation with a project that wanted us to invest in them, and telling us that they were the next big thing. And I said, that's great, but you've got 7,000 other mates out there that are saying the same thing. There were 7,000 coins. This is 6 to 8 months ago. There's now 13,400. So we've almost doubled the number of projects that are listed on CoinGecko. Now, that's not sustainable. And most of those will disappear and fade away to nothing because of a number of different factors. And the same way, metaverse, we'll have this, this big boom, we'll have this excitement. I mean, we're talking to some fantastic projects that have really innovative ideas for how to engage with the metaverse, how to acquire users, and how to make the user experience interesting and so on. But I think there's a little bit of way to go. And I think once we sort of get over this initial high phase, there will be consolidation in the market, no doubt. But you'll have, the true players, things like Justin's building with Boson. I mean, there's a real practical application there that's already been proven. There are real clients that are working and things are happening. And so that, you out of the ashes, the phoenixes will rise. And I think the same thing will happen with metaverse. So, but I think that, it's early days. There's a lot to do, and there's a lot of work in terms of the overall user experience. And once we do pass this, this initial excitement and buzz, then that will probably calm down a bit.
Yeah. To play devil's advocate for a second, if I may, in startups inside or outside of crypto, like you mentioned that you thought that probably 10%, and I think that number is probably accurate, of tokens that came to market in 2017 or 2016, 2017, before the crash are still around in any significant way. But outside of crypto, about 10% of startups succeed. Maybe 50% end up, or 40% end up returning the capital, or 30%, and 50% go to zero. So I think we're kind of just mirroring the thing about crypto or tokens is that tokens are able to go public and be publicly traded on a seed Series A valuation, which is still pretty risky. Whereas traditional public markets, you have to be a lot more mature. So probably similar in the metaverse. But as far as the adoption curve, so that's certainly increasing. We grew from about when Decentraland first came out, they were the only metaverse. I think actually CryptoVoxels was before then. So in February of last year, we were at about like 15,000 users monthly of the metaverse. Now across all of the metaverses, we're at like maybe 1.5 million. Maybe you guys have a more accurate number, and which is a huge growth for 1 year and a couple months. I think that the real roadblock or the real opportunity for the metaverse to go from 1.5 million monthly active users to 10 million, 100 million is to be scalable enough, which is a big problem because Decentraland or Sandbox, they can't have 10 million people sign into the metaverse today. It would crash. Is to be scalable enough to have a Justin Bieber and Drake concert with mobile compatibility, so they can share a link that to their Twitter and Instagrams that a huge number of people participate in. Wonder if you guys.
Yeah, look, and I think activations like that will be meaningful in terms of providing the utility that people need in order to justify the existence of metaverse in its current incarnation. At the end of the day, you need to have engaging experiences. You need to provide value, because if that value, if that utility is not there, then people just sort of whittle away. It's like, remember Second Life back a while ago. There was a big buzz around that. There was this whole, the future is coming. This is the virtual avatars and the way we're going to be existing in the ether, and it disappeared to nowhere. Now, I'm not saying metaverse is going to disappear. It's not. It is here to stay. I really firmly believe that. It's just in terms of the evolution and the progress moving forward, you know, I feel like we will come off the boil. I mean, at the end of the day, and it comes down to, there are a number of factors. You look at macro market environment, what's going on in the world. There's all these black swan events that are going to impact on the larger economy, which are having an impact on crypto as a whole. And then you think about the projects that offer the true utility, that can actually have a meaningful business model that are deriving revenue in a real way, rather than just providing something sort of interesting and sort of glitzy for a few minutes and then people sort of lose interest. But look, I'm a firm believer in the metaverse, in the concept of the metaverse. I think that this is something that is really exciting. I think that we are living in an age unlike any other right now. The rate of technological development across multiple industries is fascinating to observe, and we're living it. And I think that, you know, we have this exponential growth. You know, I recall reading a book, one of the books back there, I think somewhere, called The Spike. And this was written, I think, 25 years ago, where he talks about the rate of progress going back into sort of almost caveman days. You get this sort of flat line development, you get the wheel, you get fire, you get these other things, and then you get sort of around time of crisis, other stuff going on, and then you get the sort of Middle Ages and then the Renaissance, when things start to really boom around that time, and then following that to now, it's just this exponential path upwards. And I think this is something truly fascinating to behold. I think metaverse is an important part of that progress, and the way that we evolve as a species ultimately. So, you know, I'm a big supporter. There are projects that we're still ardent supporters of. And looking forward to seeing how it plays out. I just think on the sort of the more of the short-term horizon, we'll probably see more growth and activity. I mean, there's that kind of lagging indicator, like investment into metaverse is, I guess, a lagging indicator of how things are going to go. I feel like it is slowing down a little at the moment. At least that's my experience, and maybe that's, you know, somewhat reflective of the larger macro environment, where people are just sitting on their hands and a bit nervous about everything, and so they're saying no more often than they're saying yes. It's certainly the case with us at Faculty Capital. We're saying no. I mean, I think we reviewed, I was talking to the head of investment last week, and we actively did DD on 87 projects. There was probably another 80 or 90 that we looked at and instantly passed on. And of those, I think we've invested in 7. So that's like a 5% hit rate. And, you know, back in the bull market, it was a little different. We were kind of throwing money at everything. But look, I think it's exciting times, no doubt about that. And I'm really excited by what some of the builders are doing in the space in terms of looking at the vision of what's possible, and we're really planting the seeds of the future now.
Exciting for sure. So guys, great discussion on the metaverse. I'm also a firm believer, and I'd love to continue the discussion, but we've got 15 more minutes, and I'd love to talk about some other trends and opportunities that you guys see in the market. Maybe back to Luke, if you want to.
Sure. Sort of focusing back on the
companies, your advisory companies, what type of opportunities are you seeing?
Sure. And sort of coming back to the focus of this particular conference, NFT Summit, and NFT sort of being in the spotlight.
Right, yeah, in the NFT category.
Yeah, I unfortunately, being that it's now 5:45 in the morning here in Adelaide in Australia, I didn't have the opportunity to catch any of the previous speakers. I think I saw the last 5 minutes. They were talking about real estate. I think there was another metaverse narrative there. Look, I think there are some really interesting practical applications for NFTs beyond the obvious, and beyond some of the things we've touched on now, and beyond just the generic JPEG business, which has been sort of blowing up with the apes and so on. One thing that I'm kind of fascinated to see how it evolves is in the DeFi sector and in finance in general, and NFTs being used as financial instruments. We have a project that was kind of ideated out of the faculty group, but is a DAO, so it's completely separate altogether, called Spool, SPOOL.fi is the site if anyone's interested. It's essentially like a yield aggregator. It enables you to make one deposit, and that one deposit is then split into multiple yield farms, into Aave, Curve, Compound, and so on. And based on your risk parameters or your profile, it will automatically seek out the maximum yield for the minimum risk and rebalance your portfolio as yield changes or as risk changes. It's really quite a powerful project that's only just started out. I think it was about a week and a half ago that we launched. I mean, there's 65 or so million TVR, total value routed. We're not locking money up. We're routing it to the existing protocols. Something that we're looking at with Spool, which in terms of the application of NFTs that I find really interesting, is these spools, which is essentially a portfolio. Okay, it's a diversified portfolio of yield farming. And you potentially, let's say, for example, there is a Swiss private wealth manager who has a high net worth client. The high net worth client says, listen, the market's looking pretty shady. Inflation's going up. I'm not earning enough real interest in my bank account. I'm looking for an alternative way to seek out yields. I'm a bit uncertain with the equities markets. What can you do? How can I achieve like a 10% interest rate? Well, DeFi seems to be the natural choice there. However, a lot of people are nervous and scared to go into DeFi because of risks associated with rugs and hacks and so on. Plus, the user experience is pretty terrible. It needs to evolve. So Spool allows them to create this diversified portfolio, split the money across the major protocols. But then what they can actually do, or will be able to do, not quite yet, is take that portfolio. Let's say they invest $10 million into a portfolio, is wrap that portfolio into an NFT. That NFT is then time locked so that it will unlock after, let's say, 3 years. If the client says, I want a 3-year fixed deposit yield bond, essentially. Well, then that whole portfolio is wrapped into this NFT. That NFT is automatically time locked for 3 years, so that after the 3-year period, it unwraps. And when it unwraps, the holder of that NFT gets access to the initial capital that was deposited and all the yield that has been accruing and compounding over that time. So what this means is that you now have an entirely new financial instrument. Essentially, it's a bond. It's a tradable financial instrument that's in an NFT. So the holder of that NFT and the one that's holding it after that 3-year maturity gets access to the funds that are inside. Until that point, you cannot access. So now, let's say you have this fixed term deposit. If you went to a bank with a fixed term deposit, it's fixed, right? It's in there. It's meant to be in there for a certain amount of time. And if you pull it out, there are all sorts of fees and so on. You probably end up eroding or losing most of the interest that you've earned. However, with this, let's say you needed the liquidity after 1.5 years. This particular high net worth client says, I need my $10 million back because some life event has happened. He can then go onto a secondary market with this NFT and then sell it. And then basically sell it for the future value of the next 1.5 years of interest at a discount. You know, there might be a slight discount on the market. So you have this secondary NFT commodities market full of these financial instruments. I think that's a really exciting opportunity. I think it's something that people aren't really talking about yet. And I think when we sort of move past the various incarnations of NFTs that most people are exploring in the more simplistic terms, when we move into this DeFi narrative, this is something that's going to be quite interesting, particularly as people are seeking yield in turbulent times, and DeFi becomes the sort of the go-to to achieve that yield.
Very interesting. And Justin, what about you? What other trends are you seeing?
Yeah, I mean that is super interesting, Luke, and quite similar in some ways to the way with Boson Protocol we're using NFTs, that like kind of NFTs with superpowers, if you like. So in the same way that you're kind of locking up investments and stuff, we lock up a commitment, almost like a forward contract, to trade between a buyer and a seller. So we lock up a buyer's commitment to purchase something from a seller as an NFT that's got game theory in it that ensures that the transaction is kind of mediated and you can trust the transaction. And again, once that buyer purchased that NFT as a claim on the physical asset or the fizzy digital, it's a bundle of assets. That buyer can then sell that. That buyer can interact with the whole NFT and kind of DeFi ecosystem to fractionalize that, to use that as a collateral for a loan, or to on trade and transfer like any other NFT. In addition to that, we have an application called Nifty Key, which just came off like the MasterCard Start Path Accelerator, which is an NFT loyalty program that then plugs into these Boson sort of commerce NFTs, meaning you've got things like token gating. You can do complex programmable rules on the commerce. So like just by programming this NFT, you can program like loyalty and gamification mechanics. So you can say, okay, this physical asset can only be purchased by someone that's got, I don't know, CryptoPunk in their wallet, right? Or someone that's got this balance of ERC20s, or somebody that's collected this Pope. Only you then can, or you're somebody that's wearing this wearable. And so, I mean, I think NFTs are becoming this kind of this standardized object, whether it's going to represent, some sort of a new type of bond, a physical asset, a digital asset, access, whatever. It's a standard, programmable, standardized object. And I think a big part of what's driving this next wave of innovation that makes it quite different to things like Second Life is, the strong property rights that crypto enables. It's not like Second Life. It's not like Facebook, where you're just buying JPEGs or where you're just buying skins. These things are ownable, and that immutability of crypto means you've got strong property rights. And so, I think increasingly, and I just put that spool on my reading list, increasingly what we're going to see is NFTs used as instruments, as mechanisms, as these things with superpowers, not, this super powerful object that just represents a JPEG, right?
Absolutely. I think there's two important things, or there's a few important things you touched on too that I'd like to sort of pick up on. One is the fractionalized aspect. The other is the property rights, or the rights management. So on fractionalization, you have this ability, we've already seen it before, where there is a project, for example, that we incubated called IX Swap. They took a Bored Ape, they fractionalized it into multiple little NFTs. So owners of those NFTs own a share in the Bored Ape. Because if you can't afford the whole one, well, then you can at least afford the part. We've seen this with other assets as well, where you can have sort of partial ownership and fractionalized ownership. Fractionalization is also useful for, and coming back to your point, Justin, about gamification. One of our incubation projects called GameStar Plus is the Netflix of board games and game night, essentially. Which will be launching. It's actually already launched. There's a game, Family Feud, that's available in Target in North America, where you can actually have Steve Harvey hosting Family Feud in your home. But it brings in a sort of digital element. One thing that we're building into that is like an NFT trophy room. So as you're playing these games and you're going through the motions, you unlock these NFTs of achievement. They go to your trophy room. Most people don't even need to know that it's an NFT, frankly. It's just the fact that the NFT is the most effective way to hold these particular assets. But then as you're sort of rolling along through these various games, you can find partial NFTs or partial sort of trophies where you get one piece and then another piece, and then you need the third piece. When you get them all together, then you unlock the value that's in that. It can be exchangeable for merchandise, products in real life, for example, premium access, subscriptions, tokens, cash, whatever it might be. And I think this sort of fractionalization allows for inherently better gamification, to sort of the cookie crumbs down the sort of the track, so to speak. So I think that's interesting. And in terms of the rights management too, I think this is something that we saw recently with Yuga Labs, where they acquired CryptoPunks and imbued the same rights as punks as the apes had, where you could actually commercialize them. I think that was one of the interesting things that accelerated apes beyond punks. Punks were the OG, essentially. They had a huge inherent value, but Bored Apes started a lot lower. When people saw that they were able to actually commercialize these NFTs, once you had that NFT, you owned it and you could do whatever you want with it, whether you wanted to stick that on a wine label or you wanted to, Timberland, I think, making a band of these apes and then releasing music or whatever it is you could commercialize. That opens the floodgates for the possibilities and for the commercial exploitation of these NFTs. And now, CryptoPunks have retroactively had this applied to them as well. Another one of our incubation projects, Savage.app. Savage is essentially it's like a Shutterstock on chain. It's like a footage, image, and video marketplace where you can take various photos or videos and so on, buy them and then use them. And so within each of these assets are now an NFT rather than just being just on Shutterstock where you just get the JPEG or the file. That NFT has the metadata in it. That metadata has the rights usage within it as well. So whether it's exclusive usage for indefinitely, perpetuity, whether it's non-exclusive usage or whether it's exclusive usage for the next 12 months, that's baked into the metadata so that you can have that verifiability within there as well. So I think that there are lots of really interesting use cases that are emerging now that have really good utility, and to the fact that NFTs are this programmable asset. I think Justin, you're spot on there. Where I think we're sort of potentially running into or going to run into some sort of murky waters is when the SEC look at how these NFTs are somewhat sometimes defined. Looking at the Howey test, looking at whether these are securities or not. And if NFTs fall into that security bucket, Gord, you know a bit about this, the security token space, it has a very different kind of regulatory applicability to it. And I think NFTs are kind of sitting outside that for now. But as they grow and expand, there's going to be a lot more interest in how these are perceived from a legal point of view, and then what sort of ramifications that might have for the industry as a whole.
Definitely, I think that NFTs are just as a result of being newer and less looked at by the regulator are kind of an interesting way, because you could have NFTs representing securities, you could have NFTs representing bonds or real estate or art or really any arbitrary asset, and then you could securitize that NFT as Justin was talking about. Certainly is going to need to get more regulated as the market matures, which I speak for myself, but I'm certainly very happy with, so that as builders and investors, we can know what is on board. But anyways, Luke, Justin, it was a pleasure to speak with you both, and thank you very much for participating. Audience as well, thank you for listening, and I think that this is the end of day one. So.
All right. Thanks a lot for having us, Michael and Justin. Great to meet you.
Thanks.
Cheers, guys.